Hello.
Yeah, hey, hi guys, it's Nicola here from Conscious Crypto Traders, and once again, I'm joined with Teresa.
Hi, everybody. Good to see you.
Yeah, what a shambles.
Yeah, what a
Call it that.
morning. Woohoo. Like, what a ride, right? Like, this is the part of the roller coaster we all love, right? Where you want to scream, but it's also the coolest part of it because it's an
Hi guys, it's
opportunity to make
Nicola here
huge
from
money as
Conscious
well.
Crypto Traders, and once again, hi guys, it's Nicola here from Conscious Have you got your
Traders,
video on there of our live
No,
stream?
it's not me. Yeah,
Good to see you. Yeah, what?
I don't,
Teresa?
I don't have YouTube,
Yeah.
so it's not coming from my end.
Right? Like this is the part of the Hey guys, give us a moment. Somebody's got a live stream
We've got a
on
tech issue.
that we just need to turn off. There we go. Hey, it's us. Yay. Hey, we're going to go over some market analysis. And boy, oh boy, oh boy, have we got lots to share with you. We are looking at this concept, is the bull run over? Or is this just a little bit of a dip that is going on here? So thanks for bearing with us. For those of you who are here, I'd love for you all to put comments in the comments section and ask questions, because I know that quite a few people got wrecked in the flash crash last night. And quite a few people also lost a lot of money, and a lot of people made a lot of money. So we really want to go over the market, where are we at, and what we're moving towards. So our agenda for today is, as always, if you're new to our channel, Conscious Crypto Traders, we are about really good technical analysis, teaching technical analysis, talking about scenarios that affect price action, and most importantly, the mindset and the trading psychology component that you need when you're approaching the market. So in today's agenda, we're going to go over the Bitcoin price. Teresa's got some data for you to have a look at whether or not the bull run is over. Are we going into a bear run? Or are we going to bounce back? We will look at Ethereum, XRP. If there's any coins in the high market caps you want us to look at that you're trading. Oh, by the way, I need to take my glasses off. That then let us know. I had my glasses broke, so I've got sellotape, and I've got new ones coming from the optometrist, so they haven't arrived. So I've literally got like 3 pairs of glasses here, so I can help you with the charts.
It's a cute look on you, though, Nicola. It looks good.
I know new people to the channel would probably going, what? But I do need them to give you good chart analysis. So yeah, Bitcoin, Ethereum, XRP. If there's a coin you want us to look at, put it in the comment section. Any questions, put in the comment section. We're here for you. So make the most of our time together today. We're also going to go over, if you're just starting out in crypto, what to look at, like what's your little bundle of beginning steps there, and then focus on, Teresa's got a whole segment for you on how do you trade these flash crashes so that you make profit, because she's been experimenting with something she wants to share with you. The rules for entry before you get into a trade, so you don't end up getting into a trade that that you get wrecked on. And then of course we'll do a little bit of mindset and some scenarios that are coming up that could see a further dump in the Bitcoin price, and therefore the altcoins, and possibly holding the market back from recovering really fast. We'll talk about that today as well. Is there anything else you want to add, Teresa, before I share my screen and put my glasses back on that are being held together with sellotape?
No, that sounds great, and I love the sellotape. And I just want to remind everyone, take a deep breath. Like, it can be really high intensity to go through a market dumping or a blow off top. Doesn't matter which way it's going. When momentum is this high, risk goes up, and sometimes people make a ton of money and sometimes people lose a ton of money. So wherever you're at this morning, like, take a deep breath, because all things pass, and we learn from them, both good and bad, right? So so excited to do today's call. Actually, this is a great environment to be doing a live call in.
Yeah, totally. And this morning, I actually recorded a video for you that goes over how to move your ill feeling in your stomach, heart palpitations, feeling sore, feeling hurt from having been wrecked in the market. How do you move that out of your body? So as soon as this live stream is over, I'm going to be uploading that. So if you're new to this channel, we are an education channel, and we would love your subscription. So if you want to subscribe, we upload educational videos daily on mindset, scenario trading, and technical analysis. So I am going to, start by sharing my screen, zooming out, and answering the question once and for all. Well, maybe not once and for all, but answering that question, is this the end of the bull market? And if you have a look at the monthly, last week I said there's a head and shoulders forming on the monthly, and we may come all the way down to 30,000, 33,000, and we did. We came down to, what was it? It was 30,085 or something like that. And some exchanges, it even went down to 29,680, something like that, right? But look at the structure of this market. We have been trading in an upward channel very, very distinctly, and just recently touched it at the top here, and now we've almost touched it at the bottom here. And this is a rising wedge, and rising wedges tend to break to the downside. So theoretically, we could go further down, but at the moment we got rejected off of the support line here, and we've bounced all the way back up here to continue trading up in this area here. We've not traded down here towards the support line. So in my opinion, right now, we're still looking bullish on the monthly, because all that's happened is we came up here, back, if we look to the left, came up here, created a high, came back down, came back up, not quite, came back down, came up here, created another high. So we have got higher highs. We also have higher lows. This wick did not come all the way down to the bottom of the wedge, which is normally where a wedge would break down to. And we didn't do that. Like, we got rejected off of the support line. So at face value right now, this is still, in my opinion, a somewhat of a bullish structure, but we are in a little bit of danger territory. And my fan on my computer's just going nuts, so I apologize for the sound in the background, but that's what that is. I downloaded some software today. I got broken glasses, a noisy computer. The software didn't deal with the fan, unfortunately. Anyway, the week before last, I said we have a head and shoulders on the weekly forming, which is suggesting a trend reversal. And last week I said it has formed, so this week's candle is going to be interesting to see whether we break out or not. We broke out. So in a head and shoulders, we met you just draw from the, you draw from the top of the head down and add it, bring it down to the neckline where it broke out. And we came down pretty much exactly a few pips short of the target, which means we could come back down and complete this move, or now we could go back up to test this neckline at 45,200 or something like that. And then that will be the test in the next week to see if we retest this neckline, support now flipped resistance, to see if we're going to come down further. And even if we do come down further, if we get rejected again on this bottom line, because this is an ascending support line, we've got rejected off it here, that means that we would ipso facto, if I can say that, create another higher low. So again, in my opinion, we're in danger territory, no question about that, because we're not above the EMA on the weekly, but it's still looking potentially bullish. So then if we come down on the daily, there is also a head and shoulders on the daily with the same target, which we've met. On the daily, it still looks like we're in a downward trend. right? There's no indication here that other than the rejection that we are looking at reversing and coming back up. But if you look down at the RSI, we're coming into oversold territory. But see this big candle up here on the volume, that's somebody coming in and doing a bit of a dump. And then if we go to the 4 hourly, which is where you start looking at, do I jump into a long or do I get ready for a short? The Ichimoku cloud is showing, we've got a little bit of a bounce happening here, but it could lose momentum because this is showing us a little bit more downward action. Now, often we break the Ichimoku, we don't follow it directly, and we can blast right through it. But for me, this is telling me I need to let the market settle, let a new pattern form, and wait. Later on, Teresa's going to talk about trading this, what to do to trade these kind of dumps and these wicks. But right now, Teresa, do you want to talk about there being any bullish divergences? Do you want to share your screen or?
Sure, yeah, let
Or
me
do you
flip
just want to
over
use
mine.
mine?
And no, I can just flip over. Oh, I need you to give me host controls. I love it that we met that target so closely, right? Because the target of the upward rising wedge was 31,000 and the target of the head and shoulders was 29, and I think we missed it by about 50 pips.
50,
So,
yeah.
and usually in a short, the target usually is short. In a long, you usually hit the target pretty darn close. In a short, the target is usually a little bit
Fall short. It falls short,
usually
right?
falls short. Yeah, that's
If
a
it's
short
it
is
could
usually
fall
short. So so it's just interesting that was like off by such a small amount, showed the amount of momentum that actual dumping had. So let me share my screen and flip over here. Oops, wrong chart. So what we're seeing right now, though, is on the regular RSI, what we've got is low, lower, low, low, lower, low. But if you look at the stochastics RSI, which I always like to watch the stochastics as well as RSI, we've got a divergence here. We've got a low and a higher low. So that can actually signal more bearish action coming up, right? So this is just something to pay attention to. This correction might not be over. So I always just trade with a lot of caution, especially after a market dumping situation, because you don't know where the market's going to retrace to. And then the market tends to have a lot of uncertainty for the next few days because a lot of people are licking their wounds, right? So I would expect this market to go sideways or even down again over the coming week, just because of what we see normally happening in a market dumping situation. Do you want me to go back and talk about the scenarios with 2013 now too, Nicola?
Yeah, that would be great. Yeah.
Okay. So a lot of YouTubers right now talking about the similarities between what's happening now and what happened in 2013. In fact, I did a video right when we first started this correction about comparing those similarities. That's actually about 2 weeks ago now, looking at this. So lots of YouTubers talking about this. This pi cycle top indicator is essentially when these lines cross, we're usually at the top of a bull cycle, right? And everybody started talking about this a couple weeks ago because the pi cycle indicator crossed and everybody was saying, what's going on? Because we shouldn't be at the end of the bull run yet relative to how Bitcoin bull runs normally operate. We should still have another 3-4 months of bull run left. And then lots of people like Willy Woo and Randall from Crypto Love and Chris at MM Crypto started noticing and talking about that in 2013, the pi cycle indicator actually topped out twice. So that's what spurred me when we first started seeing this correction to say, hey guys, I think we better look at 2013 and what happened in that correction, because that's probably a lot more analogous to what's going on right now than what has happened in a normal correction in a bull cycle, right? Because one of the things we just see, normally in a bull cycle, the weekly candle doesn't cross the EMA ribbon. And we just actually, with that wick down today, our weekly candle is going to actually, the wick is going to cross the EMA ribbon. So that's one anomaly that we're dealing with right now that we haven't actually seen in past in a bull run in Bitcoin. So just something to keep your eye on, that there's one area of uncertainty here, that this isn't analogous to anything that's ever happened before. So in one sense, we're now in uncharted territory, right? The other thing we've talked about in a couple of our previous videos is what Jeroen van Lange talks about a lot, that in a bull cycle, Mercury retrograde usually marks when the price heats up, and in a bear cycle, Mercury retrograde normally marks when the price starts to decline or move down even further. And we've got a Mercury retrograde coming up. The one exception to that rule that we found through our Scenario Champions mastermind, that we meet twice a year and we all volunteer to go look at different scenarios in the charts. And one of the questions we posed based on this scenario that Jeroen van Lange has seen is, what happened in the Mercury retrograde in 2013? And so when we go back and look at the charts, here's the first place the pi cycle topped out in 2013. Here's the second. So this was the first peak. We had a fairly significant retracement, second peak. Mercury retrograde actually marked the turnaround point of when we stopped going bearish and started going bullish again. So that's kind of interesting. The Saturn retrograde and the Mercury retrograde is coming up next week, right? The Saturn retrograde is May 26th, I believe.
Yeah.
And Mercury retrograde starts May 29th. Yeah. And the zenith of the Mercury retrograde will be June 6th. So somewhere in that 2-week period actually might be when we're seeing the turnaround, if it operates similarly to what we saw in 2013. The other thing really important to note in 2013 is we had 2, 4, 6, 8, 10, 12, 14, 15 weeks of downward or sideways movement before the price started to recover. And it actually didn't start going parabolic for 3 months after this first pi cycle top indicator, right? In fact, it was almost a full 4 months, right? So if we look at 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, was about 23 weeks later that the parabola happened. Sorry, Nicola, go ahead.
Yeah, I was going to say that timing is consistent with Saturn going retrograde, because Saturn is the planet of restriction and finances and business. So limitation is the lesson whenever Saturn goes retrograde. So it could limit Mercury retrograde's ability to recover the market in that 3-week cycle. So we could be in for 4 weeks of sideways price action, or a little bit, going down a little bit more, or a little bit of volatility. We don't know just yet, but don't be thinking, okay, this is the bottom. Now I'm going to go into a long and I'm going to ride it all the way to the top of the market, because there are scenarios which could stop that the volume and the momentum coming in to make that kind of a trade something that you don't have to hold on to for 15 weeks before you start seeing profits, right? Yeah. So Saturn goes retrograde. I think it's the 26th of May. We should do a video just on this. We said this last time and we never did it, so we should do it this time. Saturn retrograde, remember, Saturn rules finances and business. I would say that we might even see a little bit of a wobble in the stock market as well. I've always seen whenever Saturn's retrograde, the stock market gets extremely volatile and gets dumpy pumpy, which does affect the price of Bitcoin more often than not. And then we've got, are you still sharing your screen there?
Oh, sorry, I was just looking at the chat field to see. I apologize, though. You're right. I'm sharing my screen and everybody can see everybody's chat. Thank you.
Yeah, so that it's the planet of limitation. And so the concept that, in the Mercury retrograde here on Teresa's chart, where the price has gone down, do you want to put the arrow there, Teresa? That it's got there, right? And then we started going back up again. We may just take a little longer to do it or not. Like there might be some other scenario that we don't know about that could actually override that. I think our point is, if you're trading with leverage, most definitely you want to be very careful not expecting that this is a bounce, and then a traditional bounce, we bounce right back up rather quickly. At the moment, it looks like we've got a correction, first impulse wave of a correction, which means we will come down again before we go up again. So let me just go back over with my naggy little glasses. And we will go to.
I'll just make a couple more points about this too,
Yeah, sure.
if you don't mind. Something else I think really important to pay attention to here is look how many weeks had huge wicks down during this period in 2013, right? We had 1, 2, 3, 4. That's actually still fairly significant, right? That's probably a 15% retracement. 5, 6 weeks with huge wicks during this period of retracement in 2013. Okay, so this might not be the only market dumping situation we see before the price turns around again. And I think that's important to keep in mind. Just because we had a huge market dump doesn't mean this particular retracement is over and we're moving back up yet. But I think the odds are really good that we are moving back up. But just notice here that 1 weekly candle did not cross the EMA ribbon. So the thing I was talking about earlier. Okay, go ahead, Nicola.
Yeah, no, that's good. And that, and that like if you don't have Bitcoin and you're looking at getting into Bitcoin, now's the time to get it. If you're looking at trading it with leverage, we got a rejection off of this here. I'm looking on the 4-hourly here, but we didn't get a traditional bounce off of it where we just start seeing a lot of buying action. Right, like the bulls, we're talking about the bulls versus the bears in this live stream. We haven't had a lot of bull action, so I think people are a little bit jitterish. So normally, in order for us to know that the whole market is turning around and this downward trend that we have been on for since about the 8th of May, no, a little bit later than that, right, 9th of May, and we've been coming down here for 10 days almost. It is 10 days, that we need signs that this is a reversal, not just a first impulsive wave correction where we could come up like that and then come back down and either establish a higher low, and then we could go, okay, maybe we've got a W here, and then that's a sign that we're going up. Or it could come back down here to test this as a double bottom, or it could come down a little bit to fulfill the head and shoulders target by an extra 10 pips or something like that. And then hopefully come back up. That's what I would expect. But we've got it head and shoulders. So what's actually happening right now in classic technical analysis is that we have broken out of the head and shoulders. We're coming back up to retest this resistance line as support. If we get rejected off this line, we're coming back down. And again, are we going to do a higher low, or are we going to come back down and create a double bottom, or are we going to come back down and create a lower low? If we come down to create a lower low, I would be seriously concerned that we're going to go further down. But if we go back onto the monthly, in terms of the question, is the bull run over? We have all the way down to, let's say 20,000 neat. We have all the way down to 20,000 neat, which was around about the height of the last bull cycle, to retest that, come back down, retest it, and then bounce back up. And we are still in somewhat of a bullish structure to the market because we have created a higher low and a higher high. So that.
And we're not saying it's coming down to 20. We're just saying it could go that far before we would invalidate we're still on the bull run. Yeah.
Well, we're in an upward, what do you call this? A rising wedge. Rising wedges break to the downside, and when they break down, they usually come back down to the beginning of the wedge, which is around about 6,000. or you could argue it's around about 10,000. That would be highly unlikely. I think, like we just said, a short shorts itself, it would come back to retest the top of the last bull run, potentially if we do break out of this wedge early. So let's have a look at what Ethereum did, because Ethereum went all the way back down to its rising wedge opening. So here for 3 weeks, this is Ethereum on the daily. Here we started the parabolic run up to the top side, got all the way up to 4,500, something like that. This is a rising wedge, similar to what we saw with Bitcoin, and it broke to the downside because they broke to the downside more than they break up. Then we started going into this descending wedge, which breaks to the upside. However, when you break out of a descending wedge, the target is normally the beginning of the wedge, and we surpassed the beginning of the wedge. We actually came all the way down to 1850, I think it was. And you know what, Teresa? I had a buy order in for Ethereum at 1850, and I chickened out at the last minute. And I went, I don't know how low this is going to go, because Bitcoin was still going down. And so I canceled my order. Had I not cancelled my order, I could go and buy a Ferrari. No, not really. I was just joking, but it would be really good. But my point being, downward channels break to the upside, upward channels break to the downside. And with Bitcoin, we haven't broken out of this rising channel. So here's hoping we continue going up, that we've bottomed out here, but just be aware that further downside is actually possible. And Carl from the Moon, who's one of our favorite YouTubers, he shorted Bitcoin, and he announced a few hours ago that he's gotten out of half of his position. He has not got out of his entire short position, which is an indication he's expecting further downside. So as far as putting trades in, unless you're day trading and you're scalping and you're watching it, really fervently, then it's like wait and see how the market settles to find a good entry point. Don't jump in, because you could get wrecked again, and we don't want that to happen. With Ethereum, however, on the 4-hourly, we're coming back into this wedge. Some would argue that we're already inside of it. And once we get back here, the downward, we've been going up, touching the support line, coming down, touching the support line, rather, touching the resistance line, coming down, touching the support, coming up the top, touching resistance, coming down, broke down, a little bit of a fake out going on here, coming back up. So there's a trade coming up where you could go into a long. I mean, you could, if everything's looking good, you could go into a long around about now. However, look at the Ichimoku cloud. We've got a little bit of downward action here, and then this could end up being really sharp downward action. So this might just be a short-term rally. So again, be really careful. Let's have a look what's going on in that hourly. Yeah, on the hourly, it's still showing we've got downward action. So if you're game and you're experienced, you're probably already in a trade to ride it up to the top. But this has, Ethereum has been respecting these lines, other than this little fake out here, really well. So you would be getting out here and having a look at potentially putting in a short if it doesn't break to the upside, because this is a downward channel, and downward channels break to the upside. The XRP, unfortunately, got taken down by Bitcoin going down. Bitcoin took everything down, didn't it, Teresa?
Yeah, really. I love that you're showing the Ichimoku cloud. One of the things Nicola always says is don't mess with the Ichimoku cloud. So if it's showing dumping coming up in the future, pay attention, because it often is a very, very accurate forward predictor.
Yeah, absolutely. So look, this is the symmetrical triangle on the daily for XRP. And what was so beautiful before we had everything going is that we broke out of it, which was totally awesome. You're going to get to know that my charts are, I'm a creator, so my charts are very dirty, and I put it's like they look like pickup sticks because this helps me see patterns that that you wouldn't normally see. But here, this pink line here is the support line of the channel of the symmetrical triangle. We broke out and we went all the way up to $1.71, I think it was. We came back down to test this beautifully, to test this line. So now resistance has flipped to support, came back up again, but we hit resistance at $1.61, $1.62, couldn't sustain it. And then when the market started falling, XRP got dragged down as well, goes through the pattern, comes down the other side of the pattern, goes all the way back down to $1.08. And so what we're looking at for XRP now is where is the bottom. So if we look to the left, the last flash crash we had went down to 86 cents. Is that right? Was it 86 or 70 cents? Here we go. Actually, let me do it on the daily. That's going to be easier to do.
I think it was 86, but I'm not certain of that, Nicola.
Yeah, it went down. Oh, though this wicked all the way down to 82 cents. I got it wrong. Sorry about that. But the last flash crash we did went down here. This is it. Where is it? Here to 86 cents. So we did not create a double bottom here, guys. We wicked down and we created a lower low. Yeah. Now here is the really depressing thing about XRP. And I don't want to alarm anybody because I don't think this is going to happen. However, if you're trading XRP, you need to know that while symmetrical triangles break to the upside more often than they break to the downside, it is broken down. And if it, right here, right? And the target of that is 2 cents.
Yeah.
Yeah. Right.
I don't think we're going to hit 2 cents, but that could be bad.
Scenario, right? Or maybe we stop off at 72, like at the beginning of the where the actual symmetrical triangle started. But we have created a lower low here, so there's no, in my opinion, unless you're scalping and you're very experienced, it's a wait and see what direction XRP is going to go in. Now, we're due for news this week about the SEC. The SEC goes into some kind of a filing of some papers on the 20th, I think it is, and then Ripple do something on the 21st, something's happening on the 22nd, and then something's happening on the 6th of June. So all in that time frame, there could be news that catapults this market up out of the doldrums, and then we go back up and we meet the target. This could just have been a bad dream. It's a fake out, comes back into the pattern, comes back above $1.71, and then heads on up to the target of this symmetrical triangle, which is $2.81, in which case, we could be in business for the all-time high at around 350, 380.
Of course, so that always depends on what the news is.
Yeah, well, yes. Yeah, assuming the news is going to be good, which is what everybody's assumptions are. That the SEC are really getting taken to town. That Ripple have just said, stuff it. That we think you're in the wrong, and we're going to take you on, which I think is extremely courageous, right? So has anybody got any questions on any of the technical analysis? Do you want to have a look at the questions for us, Teresa? And
yeah, thanks to Lisa Fedor for looking up. Saturn Retrograde starts on the 23rd, so that's actually in 4 days.
Right.
Lisa, thanks for double checking the accuracy on that. So
yeah, thanks. Lisa's one of our crypto ninjas, which is our VIP mastermind group. There's a link below if you're interested in learning about that. Teresa, what I've noticed about Mercury retrograde and Saturn, how astrology affects the charts, is that often a couple of days before the actual event in the astrology, there is already a beginning of a reaction to what's about to happen. So we may, what's going to happen because of Saturn retrograde might have already happened. And in the next couple of days, when we finally go into the retrograde, it might just, it might be a non-event because it's already happened a couple of days early. That often happens with Mercury retrograde. The influences of Mercury retrograde can happen 24 to 48 hours before the actual time, because the energy is coming in to affect it. And of course, we all know that the moon affects our emotions, and the emotions and the human psychology drive the markets, right?
Yeah. And Peter and Eva have a question about, is this a good time to sell your altcoins and purchase Bitcoin or Ethereum? What's your thoughts on that, Nicola?
Yeah, I'm going to take my glasses off because the sellotape's annoying me. I think it depends on the altcoin and your ultimate strategy. Like everything always goes back to what's your strategy, which is what we talk about a lot. We've got a lot of videos that are already out there on putting your strategy together, and we're going to be uploading more. My strategy is have my favorite 7 and accumulate the dips up into a certain price point. So if you like XRP, you like the story, you believe in it. ADA, Cardano, for example, has done extremely well, and it's bounced. It dropped a lot, but it bounced back to, I think it's trading around $1.64 at the moment, which is really good. If you've got favorites, then and you're looking at holding them, then it's up to you whether or not you want to transition them into Bitcoin or not. And again, if your strategy is to just buy altcoins to accumulate Bitcoin's a pretty good deal right now, right? Or maybe wait a little bit longer to see if it comes down a bit more. What do you think, Teresa? I mean, bottom line is, what's your strategy? Are you accumulating? How long are you holding it for? And are you just accumulating Bitcoin, and that's why you're in altcoins? And because that will help you decide what to do.
Yeah, and one of the things I love that Jeroen van Lange talks about a lot on the blockchain today, which is his channel, is he always watches the Bitcoin dominance to figure out, should we be in altcoins right now or should we be in Bitcoin, right? And anything below 50 is, below average for Bitcoin dominance, which means it's still altcoin season. So right now the Bitcoin dominance is sitting at 43. And generally, if Bitcoin's moving up or down, the altcoins are moving sideways. If Bitcoin's moving sideways, the altcoins are usually moving up. So this is just something to pay attention to. As long as we're below 50, though, I personally will be betting more on altcoins than on Bitcoin from a standpoint of still, and by that, I don't mean the majority of my portfolios in altcoins. What I do mean is I'm not selling my altcoins yet, because I think we still have some serious room to run on some of the altcoins, especially assuming XRP gets a reasonable favoring. And even if they don't, the SEC lawsuit, in a lot of cases, the rest of the world just kind of went, who cares what's happening in the US? We're still behind XRP. And it didn't affect the price of XRP nearly as much as a lot of people thought it would. I think XRP's got a lot of room to run. So does Cardano. So does Ethereum. So personally, I don't think altcoin season's over yet when this number's still below 50.
Yeah. So. And the other thing too, Teresa, is that you get rich by buying low, selling high. And if you're going to exchange your altcoins right now after the dip, you've lost value out of those coins. You've lost 40% value. So why would you exchange it for anything? Right? Because you've just lost a whole lot of value. The time to sell your altcoins is at the peak, not the trough.
Yeah, and so everything's dipping right now, so it's kind of a moot point, right? I mean, a good time to buy Bitcoin, but it's also a good time to buy altcoins. So personally, I would look for, where do you have cash sitting around that you might put a little bit more in Bitcoin, right? Yeah. That would be more what I'm thinking about. So.
Hey, so let's talk. Oh, actually, just before we do that, for those of you who are just beginning to put your cryptocurrency portfolio together, the first thing to do is to get your wallet set up and choose a really good exchange. There are lots of videos to help you with that. Depending on what country you're in as to what exchange you're going to use. Obviously, Coinbase is one of the biggest, and it is also fraught with lots of issues there. So it's one that I personally avoid. But I do the research on what's the best. So once you've done that, you need a holding position before you go trade, because you've got it's just like savings, right? You don't go and invest in speculative investments if you don't have a savings portfolio. So it's the same with crypto. Have your core amount of Bitcoin, because Bitcoin is a really good price at the moment, could even go lower, so you can get in a bit lower if we retrace back to where we dipped down to. I think it's good to have Ethereum, because Ethereum is outperforming Bitcoin in terms of the percentage return for your dollar. And then you might want to consider having some XRP and some ADA, maybe Polkadot and Binance Coin, because they're in the top 10. So big market caps, a lot of popularity, a lot of trading going on in those coins. So there's relatively more stability there than going out and getting Dogecoin or getting all of these meme coins that are now the craze that can shoot up. And if you're watching the market, you can make a lot of money. But if you're not and you're out one day, you could lose everything. So you do the safe thing first, which is get your Bitcoin, right? Have some Ethereum, and then have a look at some other higher market caps and you hold it. Then if you're trading, then you trade some using a platform like Bybit or Phoenix. We've got links for you below where you can get some free Bitcoin, depending on how much you put into the system, that you can trade straight away. If you're in the UK and United States, I believe you need a VPN for that. And then if you're trading, Teresa, do you want to talk about the 5%, 10% of your trading portfolio versus your holding portfolio? So say you take 10% out of your holding portfolio and start trading this 10%, but you only trade 5 to 10% of that 10%, so to speak.
Yeah, you always want to be using good risk management. And just before we get off the topic of spot trading, one of the things I highly recommend, even if you're not trading on Binance allows everything to trade against Bitcoin. So when you're on TradingView, let me just share my screen for a minute. I pull up the Binance charts for different currencies against Bitcoin, right? So anything that you might be interested in spot trading, you could look at, for example, Litecoin. You can see how it's doing against the US dollar. But you can also look at Litecoin against Bitcoin, right? And right now, Litecoin's down against Bitcoin. So it's a good idea to always be paying attention to these charts. I only trade the oscillators. Willy Woo first came up with this concept that there are certain coins that oscillate against Bitcoin, and there's certain coins that degenerate against Bitcoin. And so I generally really focus on just trading the oscillators, because my ultimate goal is to accumulate Bitcoin. But you can have your favorites or your watch list include all these Binance charts against Bitcoin. So that'll help you decide when you want to spot trade those coins back to Bitcoin in their relative comparative against Bitcoin. Most of them trade within some kind of channel, and you just have to look at, are they at the top of the channel or the bottom of the channel? The other thing Nicola was mentioning, though, is good risk management. So let's talk about good risk management, right? You need to decide on any given trade how much of your portfolio you're putting in a trade and what your stop losses are. So personally, on any given trade, I only ever trade 10% of my portfolio on that trade, unless I'm going all in. Like, so if I feel super confident in a trade, my definition of all in is I could go as high as 30% of my portfolio. And I tend to do that based on what kind of trade it is and where are my stop losses, right? So personally, I do two different kinds of trading. I normally do large pattern trading, in which case I might be using fairly low stop losses, because crypto is so volatile. If your stop losses are too tight, you're probably just going to get wicked out.
Yeah.
But I also do scalping, and I mostly just do scalping so I can learn better entry points. I mean, because I generally don't have the time to devote to do scalp trading. Those are very short, tight trades. Like, so you get in fast and you get out fast. And in those cases, you might be using very tight stop losses. And again, how you choose to do your risk management on scalping versus a pattern trade, the risk is a lot higher on scalping. So I might only be trading 1% of my portfolio in those cases, or 2%. because I have a lot less confidence in the trade. So that way you're not risking nearly as much of your portfolio if you do end up with a bad trade on your hands.
Yeah. We've got a question there about how far do we think we can go for the price of Bitcoin. So right at the beginning, I don't know if you saw the beginning of the video, but of the live stream rather, but right at the very beginning of the live stream, I showed this wick and the price, it went down and it touched the rising wedge that we have been trading in, and it got rejected fairly radically. Boom, came all the way back up here to trade around 37, 38,000. But we did touch 30,000. What do? We touched 30,153, somewhere around there. So now the question is, what is Bitcoin going to do from here to show us that we have a trend reversal and we are now going to higher prices? So, because if we go down, like we've already reached the target of the head and shoulders, so we've played out the bearish pattern, right? Now we're coming back up here to test this as support, and normally, you know, we had a few pips to go on that head and shoulders, so we could come back down to retest that, create a double bottom, and then say, hey, double bottom, W, we're heading back up, or an inverse head and shoulders, we're heading back up to higher prices. Otherwise, what needs to happen is that we get a fairly significant rally, which we're not getting at the moment, and then that would also tell us that we're heading up to higher prices permanently, well, semi-permanently for this particular run. So this could be a bear flag that is forming, which is why I'm not trading Bitcoin at the moment until we get a few more hours of price action, in which case, if we break that to the downside, because bear flags are bearish, then the target for that, depending on where we break out, we could break out down here, we could break out here, might not break out at all, right? But if we break out, that takes us down to 33,900. We could come down to 33,500. There's a significant support there, and then you know, head on back up to the upside. The thing to watch is breaking this trend line, because if we break this trend line and we confirm the breakout and we head further down, then we're breaking the structure of the rising wedge, in which case the target is the beginning of the wedge, which takes us to, oops, about 9,600, which I highly doubt. If anything, we could come, which is what I said at the beginning of the live stream, we could come to retest last bull run's highest high, which was around 20 grand. And again, I don't think we're coming down here. I think this is looking pretty strong, that we're respecting the support line. We didn't cross it at all. So yeah, so those would be the targets to watch out for. If we go back to the 4 hourly, we could come back down, as I said, to retest this, play out this bear flag. There's the pole, or head up for higher prices. I mean, Ichimoku's saying we're going down a little bit, so this would be the ideal scenario, because this would be a bit nerve-wracking coming down to the support line and then going back up again. The other part of that question is an answer that I don't know, and the question was, Teresa, maybe you know, because I know that one of our agenda items was talking about trading the wicks and trading the dumps, and that is the wick out. The wick out. Apparently some people online are talking about wick outs. Do you know anything about that?
Well, I can certainly talk about how to trade a market dumping situation, but I don't know specifically what you mean by a wick out.
Yeah. Sounds like a dance off to me.
Yeah, I'm not used to that term personally. Yeah, and that, I mean, great analysis, Nicola, because like a week ago, I would have told you my worst case scenario was somewhere between 29 and 30, which is what we hit last night.
Yeah.
right? And now I'm thinking, this is starting to look a lot more like 2013 than when we first talked about it. It's looking a lot like 2013, 2-3 weeks ago, right? And the one thing to keep in mind, in 2013, the market bottom was a 69 to 70% retracement from the all-time high at that time when the pi cycle indicator topped out the first time. And 69% retracement puts us just under 20,000, right?
Ouch.
And I think 18, 19,000 is the lower Fibonacci level too, right? From this all-time high. So
What did you say? You said it could go to 60,000.
Sorry, I'm not
60,
clear what you're
sorry,
asking.
60% retracement.
69% retracement, which is what it was. So 69%, I think, is putting us just
20
under
grand.
20,000.
Yeah, 20, which is going back, got goosebumps, going back to retest the all-time high of the last bull cycle.
Yeah, which often, one all-time high is where we bottom out at different points in the market, right? It's just moving between Fibonacci zones. So do I think it's probable that we're going down below 20,000? No, but I do think it's possible. I do think that that's possible.
Ouch.
Yeah. And that would still not invalidate this bull run.
Nope.
We could do that and still be on the bull run. Yeah.
So guys, if you're trading with leverage, it means that you need to be careful with your stop losses and not let your trades run down to the next Fibonacci level and top it up and lower your leverage, because it's then going to bounce up, because it might not, right? It just like last night, you could get wrecked. So look at those stop losses. So should we go on to talk about trading these dumps? Teresa, do you want to share your screen, or do you want to use my?
Let's just stop sharing the screen for a minute. Let's just talk about trading a market dump, because I think it bears thinking about what's happening when a market's dumping, right? Because usually a market dumping scenario is started by a few whale traders putting in really big trades. So we get a spike in the sell volume. So the red candles are starting to go up. More big traders start to see it, and they start putting in really big trades. This starts to create an increasing momentum. It's like the snowball running down the hill, or it's almost like a freight train, and everybody's hooking their cars on to the speeding freight train. So the train is getting bigger as it's gaining momentum, right? Because as traders, especially the seasoned traders, see market dumping going on, they start adding their shorts into the mix, right? And I used to, in my days of not understanding, especially crypto trading, because I came out of the world of Forex trading, which is a much better behaved market, right? Because it's regulated. You don't see as much blow off tops or market dumping in that world. In the crypto world, I'm starting to realize this notion of putting in buy orders at the Fibonacci levels, or at places we think the market could retrace to, can be highly risky in market dumping situations. Because if that juggernaut gets big enough, it stops where there's nothing left to liquidate or buy. That's where it stops. So even though we're sometimes saying, oh, I had a buy order in at 29,000, right where the whole juggernaut stopped, and if only that buy order had picked up, God, the amount of money I'd have right now. But the reality is, if you'd had that buy order in at 29,000 and a stop loss at 29,000, the juggernaut might have kept going, because you would have been the last two things left to buy, right? So it's fun to fantasize and imagine that it would have picked up your orders, but it's actually equally probable that it would have picked up your orders and kept going and hit your stop loss or your liquidation point, right? Yeah. Because that train has so much freaking momentum. In other words, thinking that you can get a buy order in front of a moving freight train as a means to get on the train is a bit suicidal. Okay, like think of that, think of it in that analogy, right? Far better to wait till the freight train stops and then get on the train. Okay. So the first thing Nicola and I were talking about this morning, like, how do we help people understand how to trade a market dumping situation? Because blow off
Can I
top.
interrupt there for a
Yeah,
second?
sure. Yeah.
I
Yeah.
woke up this morning to Teresa knocking on my door, because Teresa's
Yeah.
my next door neighbor, knocking
Yeah.
on my door. Nicola, Bitcoin hit 30,000.
I'm like, are you trading? Trade this, right? I like, because the other thing is market dumping is a huge opportunity to make money, right? And so one of the things Nicola and I were talking about this morning is, because I was mentioning to her, I was so proud of myself because I've been practicing in my mind how I want to trade market dumping scenarios. And because I have a set of rules, and I've been practicing the rules in my mind, because it's so fast when it's happening. If you don't have a plan that, you know, notes or something you rehearsed in your head, you're going to sit there like a deer in the headlights and not know what to do. And a huge opportunity to make profit is going to pass you by, right? And Nicola was like, that's what we got to talk about on the live stream today, right? Like, I think you were talking about how top athletes practice their spectacular moves over and over again in their heads before they ever do it on the court, right? Like Roger Bannister, when he first broke the 4-minute mile, used to lie in bed in the morning, and he had a sign on the top of his ceiling that said, on X date, I will be the first man in history to break the 4-minute mile. And then he would visualize in his head the feeling of him accelerating throughout the race and the feeling of what it felt like to break through that ribbon. Like he ran through that 4-minute mile in his mind thousands of times before he ever broke the 4-minute mile, right?
Yeah.
So I test out different scenarios for how I want to trade things like blow off tops or market dumping. And so when I find myself into them, I already have a plan in mind as to what I'm going to do. So I'm going to share with you a plan I've been testing. Okay. I've traded it 3 times now, and it seems to work pretty well, but I would still consider this an untested plan. So I'm not suggesting you use my plan. I'm suggesting you create your own plan and then practice it in your head. Because in a market dumping scenario, you don't want to be sitting there wondering, what should I do? What should I do? What should I do? Oh, I'm liquidating. Oh, I hit the stop loss, right? You don't want to be in that scenario. You want to react fast and decisively. Okay. So here's what I do. Okay. The first thing I do is I confirm, is the market dumping? Okay. And there's a couple things I always check, and this is where I will share my screen, right? I always have these big aggregator sites open. And in fact, I usually have an incognito window with, this is the Bitcoin aggregator site. So if you just go to btcusd.aggr.trade/pound, you could put any currency pair in there and it'll give you the aggregator. This is basically, if you look under the settings, it shows you the exchanges this is aggregating from. So it is missing a few, like it misses a few of the big Chinese exchanges, etc. But you can have this set to show you only trades of a certain size. So I usually have one of these open that shows me trades above 1 million, and one of these open that only, and that one has auditory alarms on it. And it only gives trades above 10 million. So you can actually set this to ring a little alarm. And these $1 million trades go in every few seconds. So I don't have a auditory alarm for the $1 million trades. But my first clue to market dumping this morning was I heard the auditory signal for a $10 million trade going in. And I flipped that open, and sure enough, there was a $10 million trade. And I flipped over to the site where I have all the $1 million trades, and it was a sea of red. There was only shorts. And I scroll down, and for like 2 or 3 screens worth, nothing but shorts on this screen. I flipped over to my chart, and on the hourly, sorry, that's the weekly, a massive red candle was forming, right? So those are my first 2 confirmations, right? That only took me a few seconds to come to that realization. Oh, I wonder if market dumping is going on, right? And I was looking at the hourly candle. And I'm already seeing we're moving into this and this candle's starting, right? My third confirmation is if it's moving more than 20 to 50 pips per second in a steady one-way direction, that's my third cue. We're in a market dumping situation. Okay. So the plan I'm testing right now is first thing, get out of any active trades you're in unless it's a short. Like, so if you're in a long, you want to get out of that long and get out of it fast. The second thing I want to do is open up a short, because if I'm going to have losses from the long, I want to make them back in the short. Okay. So I flip over to Bybit, and the fastest way to do that, and I literally practice this in my mind, is I open up a short that's bigger than the long I'm in. So I don't bother going down here to cancel the long. I go straight up here and I do a 20 or 25% short, because I know the long I'm in is 10% of my portfolio. What this is in essence going to do is it's going to close 10% of this long is going to close the trade I'm in, and the other 15% is going to become a new short that I'm now trading. Okay. And that's
So
the
stop
fast.
right there, Teresa.
Yeah.
So you're saying that if you have a long in Bybit, you can short without cancelling the long. You just
No,
short.
the short cancels the long.
Unless you're doing sub accounts, right?
Doing the short literally causes the long to cancel. So
Wow.
if, let's say I have a $10,000 long in trade and I do a $20,000 short, what I'll end up in open positions is a $10,000 short. So the first 10,000 of this closes the long.
I should have done that on XRP last night.
Yeah, so that's the
know that.
quickest way to get out of your long and into a short, is just do it up here, okay? But the other thing I double check is I do not go into high leverage at this point.
Yeah.
Because, so I check, oh, sorry, this keeps popping up. Go away, system updates. Yeah, so I double check my leverage and make sure it's a palatable leverage. It takes a few seconds though to change your leverage. So if this is at a level I mentally think I can live with, I don't bother changing the leverage, okay? But I usually trade 7x or 10x, somewhere in that zone, right? So if it was either of those, I would have just stuck with it as would I open in the short, okay? The next thing I want to do really quickly is go over to my active orders and cancel all right here. Get out of any active order you're in on that currency, okay? Third thing I want to do is flip over to all my other currencies and get out of all my active orders on those too, because if Bitcoin's dumping, there's good odds other things are about to dump or are already dumping. So I go and check my other currencies, okay? And I usually, when I put this short in, I usually start with a pretty tight stop loss. So I usually put it at 5%. So at least I know mentally, worst case, I'm losing 5% of 10% of my portfolio, not a lot of money, right? So as soon as I've done that, that takes a moment or two, I come back and check my open trade. In fact, I might be going through that same cycle on other currencies. In this case, I decided I'm not going to trade multiple currencies just because mentally that takes up too much bandwidth. And I'd rather be on point and trade the one really, really well, right? But third part of this scenario I'm testing of how I trade is I then move my stop loss into profit as quickly as possible. So I come back here to the position I have open and move the stop loss, assuming it's still moving down rapidly. I might even add to that trade at that point if the momentum is still high. Like, so if I can visibly see the market still dumping and still flipping back over, all the same confirmations. If this is still a sea of red and there's more shorts coming in every few seconds, then I might even go back here and add another 10 or 15% to this trade. And then again, get my stop loss into profit as quickly as possible, right? I'm now flipping over to TradingView, and I keep the 1 minute open when something like this is going on.
Yeah.
And I have favorite indicators to watch on the 1 minute. Sorry, whoops, I'm messing up my charts. But I start watching, And like the stochastics can be a good indicator. I have a few indicators I've purchased, so I'm not going to show them now because I am still testing them. I'm not sure if I want to recommend them yet. But you could watch things like the stochastics and other momentum indicators, because once it starts losing momentum, you want to get out of that short. It can turn around and turn around fast, right? So you might even, as soon as you're in profit on your stop loss, I would recommend adding a trailing stop loss and trail it by $300 or $400. So when the market turns around, you get out of the trade quickly, right? But once you're out of the short and you're pretty confident the market's turned around, my next step then is to enter a low leverage long. And by low leverage, I mean like not more than 5x max. Because the reality is it can turn around and then keep going back down. Because there might be guys over here that don't know the market's turn around. These $1 million trade traders, these are the big traders, right? So if this sheet is still showing all red, I would not yet enter a long. I wait till I start to see long trades on here, right? And these are just the scalpers, by the way. Like if you watch these aggregate sites a lot, there's lots of guys scalping at the $1 million level, right? So what I'm looking for over here is, what's the market consensus? Are we still going down, or have we started going up? And if there's a clear market consensus, wow, $1.8 million liquidated long. Sorry, that just caught my attention. That's gotta hurt. So if there's a clear market consensus, then you can feel confident putting the long in, okay? Again, don't bother trying to do a limit order. You're gonna click over to market. You're gonna put in a market order. I usually do a 10%, so 10% of my portfolio, right? Buy long with a tight stop loss. So like 5%, right? Because if it turns around, you want to get out of it quickly. As soon as that stop loss is in profit, or in other words, so as the market's rising, put the stop loss in profit, I add to the trade. So you can increase your leverage at that point and add another 5 or 10% to the trade. But you want to have your stop loss in profit, because when you're in these market dumping situations, the market can start really swinging wildly. And so you want to be very cautious for adding. So that's just my personal little plan for how I trade these. I've only tested it a few times, so you're welcome to it. And I would appreciate it if you'd send comments and let me know how it works. Like if you test it and it tests well for you, let me know. So please know I'm not recommending that as a strategy. I'm testing it as a strategy, but it's tested well the first few times I've tried it. So I really do think it's a good idea to scale in and scale out when you're on in situations like this. The other thing with
Teresa,
oh sorry, go
before
ahead,
you
Nicola.
go on, Teresa, I would say that that's a strategy for experienced traders, not for beginners, right?
Correct. Yes, I would absolutely say if you're a beginner, stop at the get out of your active positions and close off all your orders. Okay. And if you're doing this, practice it in your head. You could test trade it this way on Phoenix or Bybit's testnet, where they allow you to trade fake money. And actually, I would suggest, even if you're an experienced trader, I would try it on one of the test nets with fake money a few times before you start trading it live this way. But
Yeah,
I
because
think
you can get wrecked really quickly when the market's dumping. But I love that strategy of jumping into a short if you're in a long and the market's going the other way.
yes.
I had no idea you could do that in Bybit, so that's awesome. That's gold.
Yeah. The only other thing I would say, a market dumping situation is one of the few times I would ever use higher leverage. Because if the momentum is clear and solid in a single direction, that's where you can risk upping your leverage and pulling the stop loss up. Again, I would only do that if you're an experienced trader and you're really, really clear on the market momentum and the market direction.
Yeah, because you've got gravity on your side, right? Like when the market's going down, gravity's here and it's pulling you down. Whereas when you're going up, you're going up against a lot of resistance, right?
Yes.
And
Yeah.
you've got to push up, but you need a lot of momentum to get up.
Yeah. And so the other thing to remember, the final thing to remember in market dumping situations is wherever it rebounds to, it normally starts coming back down again. So it will rebound hard after a market dumping situation, but it usually then starts retracing back down, not necessarily to the point it dumped to, but that usually begins a softening of the price for some period of time. So I would highly recommend whatever trade you open up down here, you get out of it when the market starts turning around, and then re-enter after the next pattern, because otherwise you're going to lose a lot of that potential profit that you've made.
Yeah. Cool.
Yeah. So let me know how the test works, because this is just a test that some of us are running. So send us your comments either on this video or in future videos, because we'd love to know if you're trying it, especially if you're trying it on a fake site. This is the kind of thing we discuss in our scenarios champion mastermind group, where we talk about different strategies and different scenarios and how to trade.
Yeah, there's information about that underneath. So for those of you who are new to our channel is all about educating you on really good, sound technical analysis and strategies for trading Bitcoin, Ethereum, XRP, altcoins. We also do beginners videos, which you will find in our beginners playlist. And we focus very heavily on mindset and psychology, because that is the difference between winning a trade and losing a trade quite often. And we talk a lot about scenarios. What is the scenarios out there that could affect price changes? So just before we go, because we've gone way past the hour, a recap on today. Watch out for Bitcoin, because we could still go lower, right? We haven't had a sign that this mild retracement isn't anything other than an impulse correction wave right now, right? So just be very, very careful if you're going into longs on Bitcoin or Ethereum for that matter. XRP, nothing to see here right now until we get more certainty in the market, unless you're scalping and unless, of course, you are experienced. So we just wait for everything to settle and then find out where the market's going to settle and move. And I think it is at midnight today, UTC time, is the new candle for the day. That's going to be a tell-all, particularly for XRP. And also for Bitcoin on that head and shoulders. So let's watch out for that candle, and then everything could change. There could be some really good trades coming up. We talked about shorting, like if your long is going south and everything's falling, instead of topping it up and lowering your leverage and running the risk of getting flashed out and losing everything, you can just jump into a short in Bybit, and that cancels the long and enters you into a short. So that was gold. That in and of itself was worth the hour, Teresa.
Thank you.
And and until we meet again, Teresa, what do we say here on the channel?
Trade consciously.
We see you. We would love for you to subscribe, hit the bell, click all to get notified. We go live every Wednesday. We go live sporadically throughout the week if need be. And we upload training and tutorial videos every single day. So you'll get notified if you're a subscriber when we upload. We would love to have you be part of our family, part of our community. Until then, we will see you in the next video. Bye-bye.
Take care, everyone.